We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy, the podcast where we interrogate Trump's economic policies to figure out whether they're helping, hurting, or just a load of hot air. My name is Kobi, and I'm a Democratic media consultant trying to figure out how the Democratic Party can once again be the party of economic mobility and prosperity. I'm joined by my co-host, Banker Bill. Banker Bill is a very well-credentialed banker, a very independent voter, and somebody who loves to call BS almost as much as he loves to make money. And today we're going to be talking about Trump's 100 days. Now, we recorded a whole bunch of episodes that were not fit for public distribution. We only shared them with our friends and family. But the second episode we recorded was a really important podcast that I want to hold ourselves to. It was the benchmark episode. We said after Trump's inauguration, if we're going to give Trump a fair chance, what would be the economic metrics by which, if he achieved them, even I would have to admit he was successful economically? And in that episode, we established 4 benchmark metrics. First, inflation. He had to bring it back down to that 2% number, that Fed target that everybody's had in mind for decades now. 2, unemployment had to stay about the same. Little bit of wiggle room, but unemployment was good. He just had to keep it where it is. He had to keep GDP growth at or above 1%. And finally, we wanted that 10-year Treasury yield to be 3.5%. Now, if we look at those, the numbers are actually a little bit better than the headlines would lead you to believe. Right now, inflation's at 2.4%. So it's not really improving since Biden's left office, but it's not exactly getting worse either. Unemployment, and again, Banker Bill loves that U6 number, which includes people who are working part-time that wish they were working full-time, as opposed to that U3 number that you're used to seeing in the headlines a little bit more often. Our metric was 7.5%. That's what it was when Biden left office. Right now, it's 7.8%. My understanding is Banker Bill saying that's good enough. That's in the ballpark for right now. GDP growth is where it starts to look a little grim for Trump. Right now, the headlines are saying it's in the red, and that's quarter over quarter. When Banker Bill and I were preparing for this episode, he wanted to be clear that we're going to use year over year numbers. And still, if that picture is a little rosier, it's at 2%. We're going to drill into that. Whether that number is good or bad, certainly not looking as good as the previous 2, but Banker Bill thinks it's not quite as bad as the headlines are leading us to believe. And finally, that 10-year Treasury is up. We talked a lot about that in Liberation Day, both in our breakdown and when it happened initially. And there, I don't think there's going to be a lot of wiggle room for Trump to get out of. But we'll see what Banker Bill says as we break it down across the board. But just top line, Banker Bill, I want to ask, what grade are you giving these Trump 100 days in office?
A letter grade? Do I have to? In terms of maybe impact or where they want to go, what they're trying to do, probably a B plus. On messaging or form, probably a C minus, given some of the tumultuous freakouts in the market that occurred recently in early April. Yeah, I think that's probably fair for them. If you what they set out to do, you touched on it, GDP, you touched on unemployment. It's still early, so I'd probably give them a B plus on their own metrics and how they've impacted so far.
That's a crazy positive grade for an economic performance that I think across the board is worse than Biden's worst day ever was.
Well, I mean, I don't want to get into whose economy it is. All right, I'm going to say it's the administration wears it beginning January 20th, but we all know that there's some pieces baked in. Inflation just printed its lowest number in the end of this month. What was it? April. The lowest inflation, you said 2.4. That's the lowest at least since early 2022, January of 2022. And the lowest prior to that was September of last year, 2.43. So we're making a new low in inflation. Good. You said real GDP, so that's inflation adjusted GDP, was plus 2% year over year. Our target's kind of 1%. That's pretty good. And just to put that number in context for you, 2% it grew by. So the United States economy year over year grew by the entire GDP of Sweden, $600 billion. That's pretty impressive. Unemployment is trending up, but still hanging in there. 7.8% you mentioned, but trending up, comfortably up. The low since what was it, early 2022, the low was 6.6 in April 23, 6.6 December of 2022. That's trending up. I think that's the number that the administration beyond the 10-year yield is particularly interested in month to month.
Well, let's start with inflation. We've talked a lot about, one of the themes of this podcast has been that chaos is inflationary.
Yeah.
We've also said that tariffs are inflationary.
Yeah.
Are you surprised that the inflation numbers have been as good as they are?
Well, remember, it's still very early. It's still very early. The tariffs, the worst case that we had discussed when the market was at the peak of the tumult there, and was it April 7th or 8th, 9th, something like that? I mean, we have rolled back substantially those initial numbers. There's a number of carve outs. Ultimately, if we move to a place where there's a 10% global tariff, sure, that's much worse than where we were a year or so ago, but that's also much better than what was in effect there for those 13 hours. So you've seen headlines probably about ports are empty, there's no ships. Activity was very high in advance of the tariffs. And that is part of the reason why there was such a high amount of imports coming into the country. And that was to increase inventories in part, which increased, as shown in the GDP report, as well as consumer spending and certain business investment. So if nothing else, at least the immediate impact of the tariff and the data is some inconsistencies or differences in pulled forward or lag effects of goods transitioning across the different countries.
As these supply line issues start to take effect in our communities, should we expect there to be a little inflation blip?
Yeah. I mean, the president said as much this week. This guy is actually out there saying, so what if you have fewer dolls to choose from and they cost you a little bit more? I mean, that's you could tell me what kind of politics that ascends to, but it doesn't seem capitalist or sound capitalist to me.
Also doesn't sound like a B plus, but it sounds like you're confident that we're going to have a little inflation blip here. It's going to be minimal, and then it's going to dissipate as soon as the supply lines come back online and everybody's back to the regular ordering schedule.
Maybe that I think everybody's now in a wait and see about the tariffs and how much is actually being paid. There's obviously money coming in. It's being reported through the Customs Border Enforcement. You said the B plus. I mean, your question was about where would I grade today, right? So this is like just the quiz. You're in a multi-year long class here. They just took their first quiz of the 100 days, right? They haven't even had a test yet. Haven't even had that first semester exam yet. So a lot of things can change, and I would expect if data start coming in poorly, they're going to probably do one of two things or both. They're going to ratchet up pressure on the Federal Reserve, which we talked about, or they're going to continue to roll back certain things. They're not really going to tell you that they're pulling stuff off. They're just going to say, hey, exception or granting a delay, whatever, but not actually say, we're calling it back altogether.
So if we're not expecting inflation to get much worse,
it could. We just don't really know yet.
Right. But if we're wait and see approach could get a lot worse, but for right now, we think it's going to hold steady. Is there any path that Trump has to getting it back down to 2%? Or are we just locked in here at 2.5% with the sort of Damocles' sword of tariffs hanging over us that it could get worse at any moment?
Well, the inflation since like the summer of 2023 has been pretty sticky, and it's been elevated versus where we'd all wish it were. So it's back then it was at 3%, July of 2023, and we're down to 2.4. We want 2. We're still not there. The trend is with Trump. The trend is down. The trend is with the administration. I don't know that they're doing all the right things to try to get inflation down per se, but certainly, the trend is with them, and it's up to them and the policies that they're affecting to continue to get inflation down. And if they can do so, they should expect the Federal Reserve to also be cutting rates in sympathy with that. We touched on that the Federal Reserve's current posture is to cut.
Yeah,
So
but
they have that going for them
what
too.
policies do they have that are going to reduce inflation? Every single one of their policies is inflationary.
I think that's where I agree with you. Their talking points are more political than they are economic, and they're saying that these things aren't going to be inflationary. I think to the extent you're buying things from overseas, whether or not they show you a line item like shipping and handling that you're paying for a tariff, you will see that item increase in price.
Yeah,
It's a tax,
hard
right?
for me to give that a B plus.
It hasn't happened yet. You got to see them stop spending.
They did something extremely stupid, and then they reduced it to something only slightly stupid. I think that's at least a C.
Okay.
Do you think that inflation would already be below 2.4% if Kamala Harris were president and she was continuing Biden's policies?
No, I think we'd be about the same where we are right now.
Unemployment, I don't know if there's a lot to break down here. Everybody's a little bit nervous. Nothing's broken yet. We've heard
But trending up, trending negatively. That's not the win for the administration is not with them on that one. Unemployment's trending up, and the U6 in particular is trending up, which means you're seeing hours getting cut. People would prefer to work more. People might be getting a job, but the job's worse. And so, the unemployment data itself is definitely a lagging indicator. And where you can try to pull it forward and the data is noisier is you look at initial jobless claims. So that's people just filing for unemployment. And in particular, what I look at there is you look at a 4-week moving average because any number week to week can be particularly noisy. And with that, the trend has kind of been flat. It's not materially going up, which is a good thing. But notwithstanding, the unemployment picture is deteriorating for sure. Still from a position of strength, still strong, but definitely trending in the wrong direction. And that's going to help, for good or for bad, that's going to help inflation, to pull inflation down. Because if people lose jobs and people can't spend money, that's going to pull inflation down. It's going to put kind of a cap on prices.
Are you worried that this is going to get worse, or is there a storm on the horizon here, or are you just not liking how shaky these numbers are?
No, that's definitely the concern, to the extent that tariffs create a negative shock on demand and that people consume less. People are going to then ultimately be laid off in whatever job they're in. Could be trucking, could be at the port, could be as a finished goods assembler, where the finished goods assemble in the United States, but the inputs to that good come from overseas. It will have an impact, a negative impact on unemployment. Hasn't yet, but certainly could.
So just from the 13 hours that the Liberation Day tariffs were in effect, we're still going to see some layoffs because of that. We're not through that part yet.
Yes, and as maybe we said it, or maybe it was in the pre-show when we were getting ready, but there are still tariffs in effect right now.
Right.
I don't want to comment on who's paying what where, but at least in China, it sounds like there's goods that are tariffed over 100% right now. Right now, still, and now we're almost a month into that, right? So I would expect to start seeing some kind of drag. Or is the American economy so dynamic, which is part of what the administration's gambit is, that the American consumer and worker, one in and of the same, are just going to battle through this? But if they are, I would couch it back to you and say, well, where's the money coming from? Because this is a tax. So there's money got to come from somewhere. It's either going to come on the consumer's credit card, the consumer's going to run down savings, or the government's going to spend more money and put that into people's pockets ultimately, one way or another, and then recoup it through tariffs, right? So if there's a new tax, and you want to sell me on we're going to rise above it and still have a propensity to consume, I'm going to come back to you and say, well, where's the incremental dollars for that coming from? That's not clear to me.
All right. That doesn't sound like a B plus to me either. For the real GDP growth, I'm a little torn here. I think your point about wanting to look at the year over year numbers is well taken. But if we're doing that, then, 3/4 of that economic performance are attributable to Biden and his economy.
Much of the first quarter probably is too. I mean, there's lagged effects to this.
But shouldn't we be concerned if 75% of the last year was good and the last 25% was negative, and that trend is continuing right now? Or at least we have an entire sort of supply line issue, tariff-caused bad economic little cycle to get through here?
Yeah, maybe. It's possible that what we saw for Q1 and the pulled forward imports don't level out in the way we expect in the coming months. And that's where the grade for the administration could quickly deteriorate. And is that, does the putting on of tariffs, the tone of the tariffs, if not in practice, in just the fear and uncertainty that's out there, does that ultimately lead to layoffs? And as soon as the layoffs occur, it takes you a long time to put that genie back in the bottle. You can, but it'll take you time. So it's not like, hey, once the people start being laid off, that's kind of the end of this scenario. Companies lay you off as oftentimes the last thing to do, and then they commit to layoffs, and they'll start laying off more people over time. You now saying, hey, I'm going to pull back all the tariffs, companies aren't going to jump out and then go ahead and rehire. So I think that's the danger.
Is there any upside to this? Is there any chance that Trump's doing anything that it could increase our GDP growth, or did he just do something that killed it and now he's taking it back, so we're hopefully by next quarter we'll be back to neutral?
I suppose to the extent incremental dollars are able to flow for American goods, that's a side door into an improving GDP picture from here on out. So to the extent like, hey, I was buying this XYZ from China and I was importing it, now I'm buying it domestically, I think that could be an incremental benefit to GDP going forward.
But don't we completely expect that not to happen at all because there's no long-term plan to actually replace that manufacturing with domestic?
Yeah, that would take a long time. Yeah. And I'm not sure either that I'm actually not sure how the tariff revenue counts into. Does tariff revenue count into GDP? I guess only if it turns around and goes to government spending. Right? I'm actually not sure about that.
So again, it looks like it's all downside. The downside's been minimized. No upside. Hard for me to give that a B+. But break down this 10-year Treasury yield for me. I think that's the one where I have absolutely no idea. He's 0.8% above the benchmark that you gave us. Is that a lot or a little?
It's kind of where you'd expect it to be. I mean, and I know it sounds like I'm copping out on these, but we're still range bound. Right. On so much of this. I mean, the 10-year yield has been above 4%, above 3.5% since the fourth quarter of like 2022. It kissed 5% sometime in 2023, end of 2023. Not to focus too much on the details, but like we're range bound. We're sitting between this 4 and 5%. And I think to the extent the administration wants that down to 3.5%, like I said before, it's probably going to follow inflation, and barring increasing supply side, reduced inflation is probably going to come at the expense of output, GDP, reduced consumer spending.
Is this also one where there's a lot of potential downside, not a lot of potential upside? I mean, we're starting to see these headlines that are pretty scary about Japan potentially dumping all of their bonds on the market. Should we be worried that this could get a lot worse in the interim?
Well, I mean, no, not immediately, because they say this stuff and just even as a layman, like think through it. Okay, so you have all these bonds and you're going to get rid of them because you don't like the picture, whatever happening geopolitically. Well, how are you going to get rid of them? You have to sell them in the open market. Well, interest rates have risen. There's an inverse relationship between price and the yield, the interest rate on the bond. So all that means is, hey, Japan, let's say, bought a bond in 2020 at 1%. That same 10-year bond is now trading at 4.2%. The bond they hold is worth less than the bond bought today because of the interest rate differential. You with me?
Yep.
Okay. So if Japan goes and says, oh, we're going to sell this bond from 2020, they're going to take a huge loss selling that bond because of what the market can get today. That's the same thing for China. It's the same thing for any of these other countries that are holding U.S. debt. I think the bigger concern is there an opportunity for countries who are buying the debt currently to either slow down buying or not buy at all? And I think that's where the danger is. And that ties back to the initial kind of freak out on April 8th, April 9th, where you saw people selling off the 10-year Treasury. And then all this got called back the same day as there were those two Treasury auctions. If the Treasury auctions go poorly, that could quickly increase the interest rates on U.S. debt, which could put us then in our own kind of credit crisis or potentially a sovereign default issue.
So to me, it sounds like Trump inherited a lot of positive momentum from President Biden.
With caveats, yeah, that's fair.
Completely did his very best to wipe it out. And then after 13 hours, walked it all back. And now, best case scenario, he still has most of the momentum he inherited from Biden. And worst case scenario, the entire international free trade infrastructure that the United States built and has depended on since World War II collapses.
They might say instead, hey, I've rattled a lot of cages. We're working on myriad trade deals. Unemployment hasn't gone up because of this. Oil prices have actually come down. The price at the pump people are paying is down. By the way, the stock market's basically where it was on April 1st before I announced tariffs, or before this went into effect on Liberation Day.
If a Democrat had wasted an entire quarter of economic performance, that would not be a B+, Bill. You would not be giving Biden a B+ if he dug a massive hole for an entire economic quarter and then filled it back up again.
Well, I think, again, it comes back to, I think much of the first quarter was baked in from impact or things that happened several months ago while Biden was still president. And I'm not saying, like policy ramifications. I'm saying these things have lagging effects, and that much of what was there in Q1 was probably a holdover. Yeah, did Trump have a probably negative effect directly on GDP? I mean, probably. I mean, I can't necessarily commit to that.
GDP growth is negative over the previous quarter.
But plus 2% year over year. Like, that's pretty good. You can't say that that's not good.
We're still going to experience, as you just acknowledged, 3 to 6 months of suffering from this. There's still going to be layoffs. People are still going to lose their jobs and they don't even know it yet. And so for you to say, look, it's not an F at the end of the day, we didn't jump off the cliff, I think that's good and rational, and we need that kind of context. But in no way, shape, or form do I think that we can condone this behavior. Even if he manages to undo all of the damage, even if he magically gave everybody their jobs back, that's still a lost quarter or two. This is the greatest nation on earth. That's not acceptable. If a Democrat did that, that's not acceptable. I guess I just want to kind of remind you of something that we talked about earlier in the week. In our first episode, you pushed back on me calling the tariffs a sales tax. You said, look, if he does do the widespread tariffs on everything, then I guess it would be a sales tax, but I don't think you can call it a sales tax right now. Technically, every single thing you said in that pushback against me was true. It's not a sales tax. It's an import tax. You didn't believe that Trump would go through with Liberation Day. Nobody believed Trump would go through with Liberation Day. He only went through with it for 13 hours. But again, because Republicans get a handicap when we talk about business and finance, and Democrats are at a disadvantage whenever we talk about that because Republicans own these issues politically. You didn't take Democrats seriously when we warned this could happen. Now, it did happen. You're saying, oh, it wasn't that bad. That's the slippery slope. And Democrats can't lead on
this is pretty
issues.
bad. This is way worse than I would want the tariffs. Absolutely.
Yeah. But Democrats can't lead on economic issues if Biden doesn't get any credit for the soft landing and Trump gets a B+ because this could have been worse. I mean, there's just a double standard that we have to fix here. And I'm sorry, but we have to condemn Trump's actions here, even if a lot of the damage was undone.
Yeah, I mean, I think the first quarter was, for the economic metrics, turned out pretty good. So I gave him strong marks for that because they count on his record. I caveat that with much of what was there was baked in from prior quarters, right? And the lag that I said. So I reserve the right to certainly change my grade over the next 100 days or the next quarter, what have you. And to the extent that these tariffs create a negative drag on consumer spending and consumer confidence, yes, the picture and the grading then could deteriorate rather rapidly.
Wouldn't we all be better off if Kamala Harris was president and we never went through this Liberation Day and we didn't have empty shelves waiting a couple weeks in our future and we didn't have layoffs for the next 3 to 6 months?
I mean, you know the answer to that. That's yes, but I think he got elected. I mean, you probably agree with this too. He got elected because there's a lot of people that just want to blow up the status quo.
They want to blow up
Right.
the status quo because they don't have any faith that the economic policies the Democrats are doing benefit them economically, because people
Yeah.
like you won't give them credit for it and instead are busy giving Trump B pluses because things could have been worse.
Yeah, I mean, to answer your question, yes. If there was no Liberation Day, no threat of tariffs, yeah, of course things would be better. There'd be far less uncertainty, no doubt about it.
So I think that if we know definitively today that Kamala Harris would be better for the economy than Trump currently is.
Through Q1 2025, yes.
But you say through Q1 2025 like this is a
Yes.
normal Q1. This was not a normal Q1. One man decided to make it the craziest Q1 of all time. It wasn't the craziest Q1 of all time because there was a national disaster. It wasn't
No,
the
that's true.
craziest Q1 of all time because there was an unforeseen economic calamity like
Mm-hmm.
the 2008 housing crisis. This was the craziest Q1 of all time because Trump got out of bed one day and decided to be an economic hipster and bring back economic policies from the 1800s.
Yes, yes. The same policies he's espoused for like 50 years. Yes. And now we all have to deal with them. Look, if you look, maybe I'm an easy grader. I'm giving him a lot of credit for a Q1 that probably he doesn't deserve credit for, but he gets it because his name's on the paper, Kobe.
Then why won't you give Biden credit for the soft landing? Every single time I bring that up, you say
Well,
he doesn't
that's-
get credit. And now
I
you're giving
think the
Trump a B plus
federal-
for this first 100 days.
I just don't think the executive had a lot to do. I don't think the president had a lot to do with inflation coming down.
I need you to, do you see how we can't get out of this mess politically
Yeah, I
if
see.
you don't give Democrats more credit?
I see where you're at. Yeah, I see where you're at.
Like, Democrats can't solve this problem. They need you guys to validate them and to uplift them and to say publicly with your whole chest, if we vote for Democrats, the economy's going to be better.
All right, look, at least for my circle here, they think the economy did pretty well coming out of the pandemic for sure during the Biden administration, notwithstanding inflationary shocks that we had.
But
No, but
no, but the thing is like, we live in an age in which any reality that you want to exist can be presented to you as real.
Yeah.
Right? The problem is when we were growing up, everybody said the problem was that nobody does their own homework, nobody reads the news, nobody votes. Now, if you're somebody who
dude,
says,
we need to re-record this whole thing because you're reminding me of stuff now that I forgot about, and he doesn't deserve a B plus. The tariff thing where they just made up their economic formula and just used Greek letters.
yeah,
Dude, I forgot about that. Dude, I'm falling victim to their constant barrage of bullshit, and you can't keep track of it all.
and then
Yeah, like that's-
I keep screaming it's not a B plus, and I sound like a hysterical idiot who's just nagging everybody and absolutely no fun. And why would anybody want to listen to me?
So how about this? How about we cut all this, we take it back, and I'm going to give him a C plus, and you could say C minus.
I'm keeping it all. The one, let's transition to the one thing that I think we both agree Trump did that's really good.
Yeah.
And this is part of the tariffs. This is technically, you could absolutely describe this as a protectionist trade policy, and that's eliminating the de minimis loophole. And look, I didn't know exactly what this was either. I've just been hearing about it with sort of these tariffs, but the impact of this, I was actually blown away by it when we looked at the numbers. The idea is de minimis just means we're not going to sweat the small stuff. If you're sending a couple of gifts between family members, say between China and the United States, we're not going to subject that to customs inspections. And so Shein and Temu figured out, if we just ship this stuff as gifts, then we can make it a lot cheaper because we don't have to pay nearly as much in import fees and customs duties, those kinds of things. That business from 2018 to 2023 exploded from $5.3 billion in revenue to $66 billion in revenue.
10x, 1000% increase.
This loophole had to be closed, right? Are there any losers here?
I've wanted this closed for a long time, and I was happy that, sometime last year, 100+ Democrats wrote to Biden and said, use your executive authority to close this. And it's not just what you said, the taking advantage of an exemption or of let's call it a loophole for economic reasons. All right. There are There have been packages that have drugs in it. There have been packages that have goods in them that say that they're skirts and they're something else. There are goods that, you're saying you're shipping, like you said, we're shipping this one thing, and it could be very small, and maybe that's worth like $500, but then they're putting 10 of them in there, right? So it's actually a $5,000 package. And this is just another example in which China cheats, does not abide by its own commitments. I'm glad that this is being closed. I don't like that it creates friction for trade, but you have a trade partner that's not playing fair. And this is game theoretic, where you cannot continue to be taken advantage of when your partner is continually not playing by the rules.
If the question is, were Trump's first 100 days bad for the economy, the answer is an unequivocal yes. But as we've discovered on this podcast, once again, there is a strange double standard that's established where Republicans get the benefit of the doubt on economic issues and Democrats don't. And I think when you look at it in the context of the political coalitions and alliances that exist in this country, you'd be forgiven for falling into that dynamic. Business interests do almost exclusively claim that the Republican policies are going to be better for their bottom line, which is going to be better for the economic performance overall. But at the end of the day, if you look at the economic performance as tied to presidential administrations through Banker Bill and I's lifetime, going all the way back to George H.W. Bush, Democrats have unequivocally outperformed their Republican predecessors when it comes to the economy. And we've fallen into this really unfortunate habit where an economic collapse happens on a Republican's watch. A Democrat takes it over, has to spend all of the money that it's possible to spend given their political capital on the recovery. And then a Republican comes back into office and messes it all up again. And so I completely acknowledge the fact that we're going to have 3 to 6 hard months here because of the tariffs, because of the 13 hours, months of suffering for 13 hours of economic policy. But then it's going to work itself out. It's going to be like it never happened for the most part, best case scenario. But at the same time, I think that in a rational way, in a way that acknowledges the fact that the sky is not falling, we have to find a language to hold Republicans accountable for these absolute types of shenanigans, to hold any politician accountable who ruins an economic quarter just because they have a policy tantrum. And I think that I think that I need people like Banker Bill and the finance and the business community to back folks like me up, to back Democrats up when we're trying to make these arguments, because as we just saw on this podcast, I was really annoying, obnoxious, and patronizing for the first half of this podcast when I couldn't get Banker Bill to budge. We can't just sit here screaming that we're right and they're wrong. Look at the numbers. We need the business community. We need the finance community to back us up on this. Banker Bill, are you expecting things to get better, stay the same, or get worse over Trump's next 100 days?
Well, to the extent we're in this period of uncertainty where there are no quote unquote deals announced, and I don't know if these trade deals have to be ratified with Congress or not. And to the extent these tariffs remain in effect, even though there's another 90-day pause from April, what was it, 8th, 9th, within an extended 90 days. So that lines up like with July 4th. So that's where we're looking now. You're asking me through July 4th. Yeah, I would say the slant is negative.
All right. Well, we'll be sure to cover it every 2 weeks until then. And we certainly hope for some good news. Thank you so much for listening. Thank you so much for your reviews and your comments. Thank you so much for sharing this podcast with your family and friends. And again, if you want even more Is It Bad for the Economy, sign up for our email list and we'll send you 2 of those secret preview episodes I mentioned earlier. They're on the crypto reserve and sports gambling. And look, I hope you join us again in 2 weeks. And I hope in those 2 weeks, I am just as successful as convincing Banker Bill that Republicans are indeed bad for the economy.
So much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that.